What is the difference between a cabin and a financeable home? This is a question buyers run into a lot in Park County. A property may look like a great mountain cabin online, but that does not always mean a bank will lend on it. Banks have minimum requirements. Lenders, appraisers, and insurance companies are looking for more than views, acreage, and price. They want to know if the home is safe, livable, insurable, and acceptable as collateral for the loan. A financeable home usually needs a reliable heat source, water, septic, a proper foundation, safe access, working utilities, and no major health or safety issues. That may include functioning plumbing, acceptable electrical, a roof that is not failing, a usable water source, and a permanent heat source. A cabin may not meet those standards. It might not have heat. It might not have a permitted septic system. It might not have a well or running water. It might be seasonal use only. It might have an outhouse, a questionable foundation, unsafe decks, major deferred maintenance, or limited winter access. That does not always mean it is a bad property. It just means it may be a cash-only property, and buyers need to understand what that really means. If it is cash only, you need the full purchase price available in cash plus closing costs. There is no lender bringing the rest of the money. That is the major difference. A cash-only cabin may look cheaper because the purchase price is lower, but the cash required to buy it can be much higher. On a financeable home, the purchase price may be higher, but the buyer may only need a down payment plus closing costs to purchase it. For example, a cash-only cabin listed at $175,000 requires a buyer who can bring $175,000 in cash plus closing costs. A financeable home listed at a higher price may still require less cash out of pocket at closing because the lender is funding the rest of the purchase. That changes the buyer pool. Financeable homes usually have more buyers because more people can use a loan. Cash-only cabins usually have fewer buyers because fewer people can pay the full amount in cash. That also affects the resale value. If you buy a cash-only property, remember that when you sell it later, your future buyer may also need cash unless the property has been improved enough to meet lender requirements. For sellers, this matters because a cabin that cannot be financed usually has to be priced differently than a home that can qualify for a loan. You are not just competing against other cabins, you are competing against what buyers can afford with financing. For buyers, this matters because the lowest price is not always the best deal. You need to understand what repairs, upgrades, permits, systems, and cash may be needed after closing. Before buying a mountain cabin, ask the right questions. Does it have a legal and usable water source? Does it have septic? Does it have a permanent heat source? Is the foundation acceptable? Can it be insured? Can it be accessed year-round? Will a lender finance it? And if not, what would it take to make it financeable? Mountain cabins can be great properties, but buyers need to know what they are buying. There is a big difference between a rustic cabin and a financeable home. If you have questions about buying land or mountain property in Park County, reach out anytime. Every property is different and the details matter. Access, utilities, HOA rules, financing, and future use can all affect whether a property is the right fit. I'm Kevin Copeland with Jefferson Real Estate. We've been helping buyers and sellers in Park County for decades, and we'd be happy to help you understand your options. Thanks for watching, and don't forget to subscribe for more Park County real estate tips.